Good morning, everybody. This is Nicholas Teo from CMC Markets here in Singapore. This morning, the 8th of July 2015, it's probably going to open quite hot where the Chinese markets are concerned, namely all the Hong Kong and Chinese indices. For example, you've got the Hong Kong 43, Hong Kong China H-shares index, and also the A50s. Now, the reason for this is because in the after hours of trading or live trading in Asia yesterday, what happened was that both these three indices continued to actually tank quite significantly, losing by another 2 or 3% or so. Now, as a result of that, we are probably going to see the cash markets in Hong Kong when they resume in 15 minutes to half an hour's time, or rather 15 minutes time, continue with its selling down. Now, the point that I want to make down here is this. This is a very typical or classic capitulation stage of any market cycle. Capitulation is a point in time when sheer panic just brings all the last sellers into the game, throwing everything else or dumping everything that they have. Usually, this typically would signal the bottoming of the market. And in certain times, a good technical rebound could be in the process of actually happening. Now, it's early days to tell, and there's still a lot of things and rumors happening in China. But this morning, for example, we are hearing that as many as 1,500 stocks were suspended because the government is actually trying to artificially support the share price or support prices by not allowing further shorting or selling of those stocks. Over the last 3 weeks or so, they have also announced certain measures that include cutting of rates, both on the interest rates and also the RRR ratios. Also introducing a sort of a rescue fund, if you may, by getting a consolidation of around 20 other brokers to put in close to $20 billion to sort of support the market by buying up blue chip ETFs of blue chip Chinese shares. Now, all these measures will at a certain point in time begin to bite, offering sort of support where the market is concerned. Now, we don't like artificial support for that matter, but support is support, and support has come at a point in time where the market has actually pulled back as much as 30%. So over a very short period of time. So on the back of that, I think there are opportunities, or there may be opportunities to trade around. Now, this morning we are seeing, well, they just opened the Hong Kong 43 and the Chinese index. They've opened up, but this is up against a number that was compressed very much significantly last night. As I mentioned last night, the markets basically, cash markets for the Hong Kong HSI index, which is Hong Kong 43 that we have, closed at around close to 25,000. So this is still a steep haircut of about 600 points from where they were. The Hong Kong Chinese H-shares index, cash markets, or rather indices, closed last night at close to 11,800, about 400 points where we are. So this is very early days trade. The A50s, however, have reacted negatively purely because the A50s stopped trading early on in the evening, for example. So this is a sort of a play catch-up time. Now, let me just pull up a chart for the Hong Kong. Let me just blow it up a bit more. For the Hong Kong 43, which is similar to what we saw the Hang Seng index. Okay. Now, if you look at this, just to draw some lines across, you're seeing that this could represent that we are almost there. I mean, it's broken through essentially all those key sort of support lines, and this slide in some quarters have been argued as overdone. Some quarters, from standpoint of, we've seen people like Goldman coming out today suggesting that they still remain faithful where Chinese is concerned. Not to say that Goldman's research is anything better than the next big house, but clearly you are seeing this being reflected on the investment scene, which to some degree lends a bit of comfort. Where the possibility or the potential of actually coming in to take a bargain hunting may be represented where the market is concerned going forward. So now, just closing this and pulling up the Hong Kong H-shares index, we are seeing a sort of a similar this is the H-shares index. I mean, we are seeing a sort of a similar kind of picture down here. and if I were to draw trend lines again, you know, I mean, I think you're seeing a little bit of the excessiveness in the sell down, which potentially could offer nimble clients at least an opportunity to play perhaps a technical rebound. But it's still, like I say, early days. The best thing is to, I mean, to wait and see where the cash markets and how they open up. There's all kinds of news flying thick and fast coming in. We are seeing this long tail green arrow on the A50, suggesting that, you know, there are people who are willing to actually take that view of, you know, bargain hunting, taking a punt, and saying that, you know, perhaps this thing has been overdone. Now that said, a lot of traders, there are also schools of traders which thinks that this is a keen, or this move or going in is for the brave-hearted, and it's similar to a situation of, you know, catching a falling knife, which could come back and hurt the buyer. So essentially, I mean, I think everybody should just watch their stops, look at it as an opportunity, whether they take action or not. That should be accompanied by very good management of the trade. Anyway, I just wanted to pass this quickly across. Thank you very much.